Welcome back to yet another video. We've heard it all before. Credit cards are bad, super high interest rates, credit card debt, spiraling into debt, bankruptcy. They're all expressions and phrases I'm sure you've heard at some point. I think it's down to sort of how we're sort of brought up, how we're raised. It's what the initial thoughts are from sort of society, and it's what we're taught in schools. But are they actually the horror that they make out to be? Stick around to the end of the video where I cover why a credit card is one of the best decisions you can make and the ways to manage them properly, to use this to boost your financial habits, boost the money you've got coming in, and really take advantage of the opportunity. Just a disclaimer, I'm not a financial advisor. If you're unsure, carry out your own research, see a professional if you need to, and with that, let's get started. So you'll have to bear with me while I start on a more basic level, but how does a credit card work? Ultimately, a credit card allows you to spend money up to an agreed limit. So this is something that's decided by the bank. Let's just say it's £1,000, but that'll allow you to spend up to £1,000 on your credit card. And what they ask for in return is a minimum payment. So this is obviously a minimum payment, but this is decided using how much money you've spent of your credit limit, interest rates, fees, but that's all calculated by the bank. So you can pay anything from the minimum payment up to what you owe. Now, this is where things get interesting with credit cards. When you don't pay off your bill, so let's just say you use your card, you wait a month, that's when the timer starts. That's when you start getting charged interest. So how do you make it stop? You pay off the bill. So the way you simply do this is using your debit card. So let's just say you go to the shop, you spend £50 on your credit card. All you do is the moment you can, you pay off your credit card with your debit card. So what that means is those interest charges, everything like that will stop, but you've used the credit card for the initial purchase. Easy, right? So why would you bother? Why do I think they're so revolutionary? So the first reason is the perks. So I think credit cards, they are known for their perks. We've all heard it in a shop. Do you take American Express? No, sorry, we don't take American Express. But ultimately with credit cards, there's a few different types of perks you can get. There'll be more to this, but sort of the main ones that are out there are, as an example, loyalty points. So you can get credit cards that give you club card points, Nectar points. There are credit cards that can offer you cashback. So cashback is simply for money that you spend, you get money back for it just for spending it. You can get Amazon vouchers, you can get travel vouchers, you can get like miles towards if you travel very regularly, you can collect points to upgrade and things like that. There's a load of benefits, and all I'm saying is this would be money that you'd be simply spending anyway. So the rewards are endless, and it's all you would do is you wouldn't necessarily spend more just to get more rewards, more points, more of whatever you want. You'd be spending exactly what you would on your debit card, just on your credit, and then paying it off straight away. So it's all down to the individual. Obviously, for me as an example, if I don't have a certain shop near me, Nectar points are going to be useless. I've got a Tesco, so maybe Tesco club card points would be useful. It varies based on what you're looking for. Cashback, they tend to be quite low percentages. Let's just say 1% as an example. But if you can put, let's say, make a £3,000 payment towards a house or a car, that's £30 in cashback that you'd get back simply for having a credit card. Or saving on Christmas shopping if you get a £20, a £50 Amazon voucher from your credit card. You can see where it quickly adds up. Next up is your credit score. So your credit score is simply a number that banks and lenders, they tie to you. It's a score based on how good you are at borrowing money. So as an example, with credit cards, you can get credit cards which are built for if you're just starting out and you have a little bit of a lower credit score. But on websites, on Compare the Market, on actual credit card websites, there'll be ways to look into how likely you are to be accepted without actually applying. So that's something that's well worth looking into. I do also have a video on it. But the way this works is as you have a credit card, the term goes up. So someone who's had a credit card for 5 years instead of 1 year, as you pay monthly payments towards your credit card, because you will, because if you miss them, it can be quite bad. But you'll continue to make payments towards your credit card. But what happens then is banks can see you're capable and you're trustworthy of borrowing money, because a credit card is technically borrowing money, and your credit score will go up. As your credit score goes up, what this means is banks, lenders, they trust you more because they can see you're capable of handling it. After a while, because they trust you more, you've got more choice, you've got more variety. Rather than, let's just say, having a car loan at £300 a month or $300 a month, you're looking at $275 or $250 simply because your credit score is higher, so you're more likely to be accepted at a lower interest rate. As you pay a lower interest rate, you can save more, you can invest more, and from that you get more returns on your money. From there you can pick the house, you can pick the flat of your dreams. Even when you buy a house or rent a flat, they'll look into your credit score, but because you're trusted, it's a lot easier to do and it works out cheaper in general. And don't tell me that your dream car or your dream house isn't worth having a credit card. Another benefit is you take control of your money. So as an example, firstly, emergencies. I've got a video on doing an emergency fund as well, but in general, credit cards can help you out in certain situations. So let's just say you've had a bill come up today, you don't get paid for, let's say, another 10 days. So you can use the credit card until your payment comes in from work. And then you can obviously pay that off. It just allows you to take control and not resort to different types of debt if something was to come up. Another thing is a 0% balance transfer. So let's just say you owe a few different debts, some at 18%, some at 20%, as an example. But there are credit cards out there that, let's just say, for 6 months or a year, they offer you a 0% balance transfer. So for a certain amount of time, they'll allow you to transfer all of those debts to one credit card and have a 0% interest rate, allowing you to pay them off more easily. Another factor is protection, allowing you to take control. So let's just say you buy something online. I think the threshold is from £100 to £30,000. But if you buy something online that's not as described or it comes damaged, as an example, the credit card companies, they offer you a lot of assistance in terms of protecting you and helping you get your money back if necessary. Final one is theft. So if your card's stolen, you can see it's incredibly easy to cancel your credit card. But on top of that, credit card companies do investigate these things if your credit card is stolen and used, and it's much easier to recuperate back your money. So there's a lot of benefits. Now, just a couple of side points and things to consider. So when you apply to a credit card, it is a hard search. So what this means is it goes on your credit file to say you've applied for it, which can knock down your credit score temporarily for around about a year. So that's something that you really want to bear in mind. Do your research before applying. There's a lot of places that offer you tools to look how likely you are to be accepted before actually applying. But again, it's all down to you, and please do your own research with it. Another thing to factor in is if you've got any big decisions coming up. So if you are looking to buy a house or apply for a mortgage in the next couple of months, or buy a car, this is something that may temporarily knock down your credit score. Another thing is money management. So if you don't feel as though money management is your strength, you're not very good at keeping on top of it, or perhaps you're prone to overspending, then a credit card is unlikely to be for you. So just really consider it, because it will give you basically a pot of money to keep on top of. Another thing is to never withdraw cash from a credit card. So it's purely there to sort of be used digitally. A lot of credit cards have very tight and very high fees if you do withdraw cash. And now you see what all the fuss is about. It saves you money, it gives you perks, it helps you towards your credit score, all while simply spending what you are now. If you do things right, it's at no extra cost. So if you appreciate the content, if you like what I've put together, be sure to like and subscribe, especially if I've now managed to get you in your house or your car of your dreams. Be sure to hit like and subscribe on the video for more videos like this. If you feel as though a credit card isn't quite for you, that's fine. See my other videos and we will get you there. But yeah, thank you again. You can see I'm a really young channel, so please hit the like and subscribe button. It means the absolute world to me. And with that, thank you for watching, and I will see you next time.